Hi, and welcome to the market alert for Wednesday, the 26th of January 2022. So deja vu all over again. The stocks dump and pump again ahead of Fed. Not an unusual pattern. Nasdaq and S&P puked back into the red into the close of yesterday's session. So I'll look at that in a moment. Implied volatility moving up slightly as well, as you would expect, from the 21.99 to 23.01. This is getting back into the heights that we've not seen for some time. Back in November was the last time, and then prices, of course, finding support, moving to the upside for the Santa rally in the stock market, with the implied volatility moving down. So we're at a resistance area, or heading towards a resistance area for the implied volatility, which again is indicative of a potential market bottom being put into place. That's going to depend today on Powell. He is speaking at 7 p.m. That's the big news of the day, of the week. And he's also has a press conference at 7:30 p.m. GMT as well. In the Dow for yesterday, you will see that, I get the right chart, try that one. In the Dow yesterday, you will see that we had another big range bar. This was 1,050 points. The previous day, 1,374. The market trading to the 38% retracement and 5-bar moving average on the overnight at the moment. Will prices hold? Well, we'll have to wait and see. That's going to be down to what Powell says later this evening. Let's just have a look here, just in case we get any move to the downside. These are the areas of support should the market move lower prior to Powell's announcement later. These are the upside fibs as well, should there be a bounce to the upside following his statement later. In the 30-minute chart, you can see big moves down yesterday on the open, with a massive reversal for the second 30-minute part of the session of the market, making its way to the 200 MA, crossover in stochastic, and then back to yesterday's DP before bouncing off this and bouncing off the overnight DP as well. You can see prices there currently in a very tight range sideways, which is at the close, and also, as we've just noted there, at the 38% retracement in the daily chart. In the German DAX, a similar picture, the market trading at the 38% retracement at the moment, from this high down to here and projected back. These are the first set of upside targets should the market continue to move higher, as it's doing so at the moment on the overnight. We're certainly oversold, that's for sure. We could do with a bounce in the market. It's whether the bounce will hold, and that is all dependent on what Powell does to support it later with his narrative as well. In the 30-minute German DAX, you can see it was really choppy yesterday in this time frame, with the market following the day. You can see up and down, then breaking out, and then coming all the way back down to the low that was made first thing in the morning. Overnight, there's a bit more of a trend to the upside as opposed to the Dow, which was showing the market sideways at yesterday's close. Meanwhile, the German DAX is trading above this at the moment, heading towards yesterday's high at the moment. Well, this is the overnight high, I suspect. Let me just check that with the daily chart. No, it's yesterday's high, so that's fine. So yeah, that's this high that we're seeing here. Keep an eye on this for yesterday, because we also had some selling in this area, which obviously formed the high, and there's the high from midnight the night before, and that's the one the market's looking at. So watch out for the high this morning when the market opens. In the 2-minute chart yesterday, we didn't have any signals, but in the newer signals that are to be released in a couple of weeks, the market offered lots of trading opportunities yesterday in the morning and in the afternoon, that you can see there with the moves that were made. And again, overnight, you'll see the market moving to the upside. But you've got to watch out for that high that's lurking there from yesterday's trading session, which was made on the overnight market. In the precious metals, silver's still being hammered, as you can see. Yesterday it tried to move higher, very interesting pattern yesterday, Watch the 38, the 50, 62. It's going to be taken out. It's desperate to do. You can just feel it. And we're already oversold as well. And the pattern in this market is pretty accurate when it comes to oversold and overbought. So I would expect silver to be hammered to the downside, despite the fact it hasn't done it for the last couple of days is irrelevant. It's looking very, very weak. And to confirm this, yesterday silver just shot up nearly 30 cents and then they sold it all the way back. So whoever tried to buy this market yesterday got hammered by the banks. But it did drift back up to the upside to the close. But again, overnight you can see they're already starting to move prices lower, and a bit more obvious there in the 30-minute chart. Just not holding on the highs at all for this market, so very weak. And gold not helping either. This selling off at the 89% retracement on the overnight, and yet the dollar's doing nothing at the moment, waiting for Powell. Crude oil, however, is to the upside at this time. And just to check with the gold-silver ratio, you will see that we're heading back to 80 quite comfortably. We're going back up into this area. Once we get back up into this area, we should be oversold in the daily chart and back down to that 22 area in price terms. But at the moment, certainly silver looking very weakish once again, despite the fact there's potential war and hyperinflation. So if you want to see a rig market and how it's done, then this is the market to see it being done in, particularly gold as well. Okay, that will do it for this one. If there is anything to report, I will let you know. But as ever, watch out for the Fed meeting tonight, and I will see you tomorrow.